Okay, welcome back. You're with Patrick Loke at 21st Century Education, and of course I'm here with John Biggerton, and we're talking about Sharelord. John is the head trainer at Financial Freedom Institute and Sharelord. Now, next what we're going to talk about is really what can people expect once they actually start becoming Sharelords, they've joined the program, they're going to get some training, and what can they expect?
Okay, well the expectation of these, it's been historically shown that the average potential return from writing calls and also having collars in place, or a collar means that you've got your call, where you receive your premium, and you have your insurance policy, that is essentially known as a collar, and the students will get to know all these terms as they go through the education. The potential return there is somewhere between 3 to 9% on a month-to-month basis. Okay, and that's essentially what's been occurring.
Okay, so that's the amount of money that the percentage of the share that they've purchased.
It's the investment that they've done. In other words, for example, you've purchased 100 shares at $20.
Yep.
Okay, and you're receiving a premium of $1. Mm-hmm. Okay, so that essentially is 5%.
Yeah.
You take away the put that you're buying for insurance. If it's 30 cents, you're now left with 70 cents profit.
Okay.
Okay, so you calculate that 70 cents divided by your investment, and that is the percentage return.
And so the net return might in that situation is about 3.5%.
Correct. That's exactly
about
right.
3.5%. Okay, so when they're involved in this particular course, and they're looking at the year going out, and of course the market goes up, the market goes sideways, it also goes down.
Yes.
Now, can you explain what happens when the market's not going up? How are the returns affected?
Well, for anyone that follows the financial markets, they'd realise that even though we might be in a bear market, which means the market is coming down, just to clarify things, the bull market is the market continues to go up, and a bear market is when the market goes down. You'll find that there will always be certain stocks that may be trending in the opposite direction.
Okay.
All right. Now, on the US market, there's 3,200 optionable stocks. When we scan through the market and we identify those that meet our criteria, there may be 100, 150, 200 stocks that may meet criteria, and then we select the ones that are the most profitable as far as percentage return to then allocate into the diary.
Okay. So there's a team who do this?
Yes, there is.
Okay. And they're located in the States, are they? Or?
Look, we've got individuals in all sorts of places.
Okay. All right.
Yeah, we've got some in the States, we've got some in Australia, so it varies.
Okay.
Yeah.
So this team actually, they scan the market, and there's 3,200 stocks that they boil down to the 150.
Yeah.
And then how do they figure out, do they put in one a day about?
Oh, okay. Well, in the diary itself, on average, there's 5 trading days a week. You're more than likely to get one a day. There may be occasions that you may get 2.
Right.
Okay. There may be occasions where you may get one at the lunchtime period. There might be get one towards the close of the US market.
Right.
All right. But then there are other days you get none.
Yeah.
Because none of them meet the criteria.
Yeah, and as we've discussed, sometimes the best position is not to have a position when the market's not predictable.
That's exactly right.
Yeah.
Yes.
Okay. So then after they've they've gotten involved, they're now Sharelords. Now there's the Sharelord team is actually finding trades or investments where the market could possibly be going down, but you're still going to get the best opportunity to make money even in a downward moving market. Is that correct?
Yeah, that's right. Look, we've got very, very specific criteria now of when to actually close your position.
Right.
Completely. In other words, sell the stock as well. Okay. But what we end up doing, and that's more in the education, because otherwise I'll just carry on. That's right. But it's specific criteria. Now in the diary itself, if the stock itself is still within the criteria to hold on to, then and you need to either buy back your initial contract or do what is known as roll it down if the market's turning, then there'll be what is known as an intervention in your diary, which will alert you to the fact that this is what needs to be done.
Okay.
Okay.
And how will you know about the intervention?
You will actually get an email alert on your smartphone saying that there's something needs to take place.
Okay.
All right.
So in that situation, you're not going to get caught out. You'll be aware. I'm in a particular position and I need to do something. So most of it seems fairly much done for you. It's just a matter of learning how to place it.
It is. Look, and as you know, with any particular market, all right, you're not going to get 100% winners.
No.
Right? We look at, okay, we have 12 months in the year, we start off with 10,000, we have losses along the way, and we end up with 13,000. You know what I'm saying?
Yeah.
So as long as you follow specific rules and criteria and you're becoming more aware of what's going on, at the end of the day, you have gained. Even though may have had losing months,
Yeah.
at the end of the day, you're ahead.
Yeah, and that's pretty much what people are looking for, is that consistently year after year they're going to be growing their accounts if they.
That's right.
Well, based on what I've seen so far, that sort of 40% is not unrealistic, is it?
No. Look. On a good run, you can certainly go 40 beyond. I mean, I remember back in during the global financial crisis, my team and I, our returns during that period was quite varied, from say 30 to 150%.
Right.
Some were very aggressive and utilised all of the option strategies to maximise their returns, and others were working and they can only do certain strategies. So you can still do it. It all depends on how diligent you are. So, but our diary, for example, from its inception in May of last year till December, had a 27% return on investment.
Okay, and that's so far. Okay, and so and there's still a couple more months until that's a full.
Oh well, that's right. Yeah. That's right.
Okay, so there we go. So that's the basic. That's the basis of what's involved in becoming a member with Sharelord. In the next video, we're going to talk a little bit about what is the next step beyond Sharelord, which is Sharelord Advanced. Just a few brief, a little brief chat about what you could potentially be doing once you've got the Sharelord system down. Those profits, they could be turning into potentially bigger profits, but you need to get properly educated, and talk about that next time.